Hello, everybody. Welcome to this episode of From Lab to Market. I'll start a little presentation and we'll have some fun today. My name is Rasmus Basile. I work with VTT, and let's see if we get the right presentation up and running. There we go. We click presenter mode. Okay, I hope that you guys see what you should see. Yes, you are. Okay, so yes, welcome to the Lab to Market, and we have a really cool lineup today. This is the schedule. Let's quickly. You of course can see it in the event. You can see it actually on the floor. But this is the rough numbers here, and yeah, I'll keep this kind of short. But I hope Ville can start in a couple of minutes. Yeah, so these are the guys. We have Ville coming in from Butterfly Ventures. A really cool guy, and we have Toni Linden. Ville is an investor. Toni is from the other side of the table. Toni has been in this journey of taking a research-based startup to the market and working with investors on that. So that's his point that we want to look at. And then we have James, who is also an investor. And what we talk with James is he will kind of riff on what he've heard from Ville and Toni. We'll work a little bit on that. And I know James also has a little bit of his own presentation. And then after all this, if we go back, if you can see there at 2 o'clock, we'll have a Q&A where you'll be able to ask your questions to these guys. You can actually write your questions as we're talking, and then if we have time to bring it up in the presentation, we will, but otherwise we'll take it in the Q&A. But just write, as you get questions, you write in there in the Q&A there is a button for that, actually, I think here in the, yes. Oh, somebody wrote something in the Q&A, look at that. Is this recorded? Yes, that it is recorded. I am recording. Thank you, Basan, for asking. So it's recorded. So don't ask. Don't write any profanity. Just keep it child friendly. All right. Yes, but it is recorded. Yeah. So it's a networking session. So use that. And talking about the networking, we'll here's some tips and tricks, guys. Please write if you have a question. Ask. And in the networking session that starts at 2, you can actually talk with the people who have been presenting and me, if you want to talk with me. So use that time, go click the table and open your mouth. If you have anything remotely interesting, give it a shot. How often will you be able to talk to a startup entrepreneur who have gotten big investments or to investors sitting in a table? They're not that easy to get to. So take the chance when you have it. And yeah, that's important. So what's happening? How can you get involved in the ecosystem? Right now, Aalto University, those of you who study there or research there or are involved with that, have these services available for you. You have the innovation services that you can reach out to. They have a representative in each department, but they are sometimes not so easy to find. So just find innovation services in Aalto. They can help you. And also you have the venture program, which also have courses that you can learn more about this. And then you have the accelerator through Aalto Startup Center. And they are running certain events openly for you that you can check out. If you're like not in the accelerator, you can also apply to the accelerator at some point every year. Maybe do 2 times a year even. All right, moving on. We have the Launchpad, which I'm working with. And my boss Lotta is here. I think she's listening. So you can also meet her in the networking session if she can stay that long. And we're now looking for cool business people to join, but also if you have cool ideas in general, just come talk with us, because we're always thinking of how to commercialize different type of research. And if you have a team coming into VTT or internal VTT team trying to create something, they rarely have all the pieces needed for a full startup. So there are many you usually need experts. So you can also look at that there. Then we'll have a little cameo from feedback in the end of the presentation as well. But they're the Business Angel Network, and they have access to like every single business angel in Finland, I think. So it's a very good one to know about. But they'll talk in the end of the presentation. Also, two accelerators here are open. We have the Health Incubator in Helsinki is open. So if you have a research that's based around the medical sciences, it's very good. So you can apply. It's open until the end of this month. So please apply there. And then also we have Norrsken Impact Accelerators also open now. So you can find them at Norrsken. You search for Norrsken Investments or Norrsken Impact Accelerator. You can find them. So it's quite a good deal. So you should check that out as well if you have a idea that's kind of brewing in your head, or you have a startup coming up. The next event is on the 3rd of the 3rd, and that's a kind of a cool event because it's kind of flipped around, because then we are talking about how investors, we're teaching investors how to invest in impact startups. So you can, but you even if you're here or a researcher, you're not an investor, it's very good to listen to their perspective of things, because you can learn quite a lot if you're interested in that. And also, by the way, this is a kind of fun note. I'm starting a podcast, so if you have, it's a podcast on lab to business, going from just like lab to market. That's what we're doing here. So if you have any, when we get to tables later, I'd be happy to hear any, or if you write in the chat, any people you think I should bring onto the podcast, or any specific angle that you're interested in. And yes. Yeah, and Neely has put the earlier recordings, you can check the chat. Yeah, again, the tables, you will see them. They are specialized, so you can go to the table where some cool people are sitting. But use that opportunity. All right, that was me, and I think it's time now to bring on our first speaker. Let's, I'll stop my screen sharing, and let's go to Ville. Oh my God, he did it on his own. He didn't have to say it. He's so good. All right, here we have Ville from Butterfly Ventures. He's an awesome, cool guy. He has the best sense of art with buying pictures. You're going to love him. Okay, Ville, the stage is yours.
Okay, thank you, and thanks for having me. This is a great pleasure to talk with all of you. And I will actually now immediately my presentation. Let's see if I can get the... Do I get the, and then I put it on a presentation mode. So let's see what happens.
Let's see. Yeah, we can see. Well, you can see your screen. It's showing.
Yeah,
there we go. Looking good.
Okay, so now you're seeing the actual presentation. Good. Hey, maybe I will even put my camera off for the time of presentation, so you can focus on content. Great. So Butterfly Ventures, hopefully many of you have already heard of us. So we've been up and running now for almost 8 years, and as we put it, we invest into hidden gems of number one startup ecosystem of the world, i.e. Nordics. And hidden gems means for us cases based on science and research. And we've been doing this almost now 8 years. We started with a smaller fund, then our another partner, Tanja, who's running our Stockholm operation, started her own fund at the same time. Then we joined forces in 2015 and has been working as a team ever since. Let's see, here we go. So some facts. So this is our current team's combined track record. So we have invested into 84 portfolio companies, of which about 50 are in active mode as we speak. As in the venture capital business, usually it's very few companies create the biggest value. That's the same thing in our cases, and some exits to Zynga, Siemens, and so forth. And actually, the latest exit to Telenor that Toni is about to say something. So unfortunately, that is not yet mentioned here. So it's so brand new, but it will be added here for sure. So we are not looking into certain verticals like automotive industry or game industry, but our drivers are more these kind of a mega trends of the markets. And if we look, there's maybe 1/3 of our portfolio consists of energy efficiency related cases. There are different engine solutions, frictionless or engine related technology solutions, energy storage solutions, then a lot of well-being tech, even medtech related cases, and then construction related cases in the rapid urbanization. So these are our drivers, and then usually the cases that we are looking into, they consist of three components. The underlying innovation is often based on science. So 25% of our prospect cases comes directly from research institutions and universities, and more than half of our investments are from research institutions and universities. So the software is often the component that actually creates the value, and the hardware being the component that enables us to take the value to the customer and create the lock-in with the customer and channel to pour in more software-driven added value to customers. Kernel is a great example that you will shortly hear from Toni, but here are some other examples like this e-bike engine solution developed by Revonte from Tampere, or point cloud technology solution spin-out from Aalto University Ladimo, or then another Aalto University spin-out X-Fold Imaging, that is a nanotech solution, or geyser batteries combining the best sides of supercapacitor and lithium, and or then Medituner spin-out from Karolinska Institutet from Stockholm, enabling a big AI database and analyzing your breathing symptoms, if you will, or IPDX, Estonian German-based blood analysis solutions. So this kind of oftentimes there is two of these components, being it science software, science hardware, software hardware, and sometimes all of these three. And we don't invest into pure games or pure applications or content as such, like music videos or whatnot, or software as a service as such, like a new ERP or CRM system. That's not our cup of tea, but the software as a system business model with ARM, that's often deployed in our cases. But that's about us, and then about you. So about your case. So what's important? So there's a few issues that are most important, and of course, as we are structured as a venture capital fund, which creates a certain amount of, well, limitations, but definitely requirements when it comes to what kind of returns and earnings we are required to make to our investors. So is your ambition big enough? So if, as we talk about total addressable market, so considering the 100% of your relevant market, it should be billions, and if it's less than 100 million, then it's really difficult to justify the investment from venture capital fund. It's a bit different setup when a business angel, a natural person, is investing. But if you are set up as a venture capital fund with this structure and return requirements, so the opportunity needs to be big enough. So what's your ambition? If it's a lifestyle company, then the venture capital fund is not your potential investor. But if you are willing to create a big company and have a big effect, so then we might be your solution. So how big is the opportunity? And then of course, once you have come into conclusion that okay, so the opportunity is big enough, and I and our team wants to build this into a big enough, then really stress your idea. So you need to be able to crystallize it in a way that your grandmother understands it. So then you have a good starting point. But let's go further. So usually then when considering investment readiness of your case, so there are certain kind of development stages when you can get investment. So if you have a great idea and you say that based on this great idea, I will first develop this alpha version, beta version, minimum viable product, beta, whatever you call it. So if you are able already to raise financing based on your idea, so then your promise to investor is that with your financing, I will build this a minimum viable product. And so you, in the idea phase, you get the financing to execute the next stage. If you are, if like technology risk, for example, materializes, and you are not able to convert your idea into somewhat functioning product, then it's really difficult to go any further, because it means that, okay, now I need to do a pivot. I need to change my idea or have a new idea and then ask more financing. Okay, most of our cases, we have invested into idea stage, but usually we invest when companies has this minimum viable product. And if we invest in that stage and consider that there is not that great technology risk anymore, so we put in money and we want to see that you gain some traction with that money. So you are able to validate that this innovation and solution and product works in a way or another, and someone is willing to use it. You don't need to yet generate great revenues or anything, but somebody is using it and we get validation for it. And then if we invest into your minimum viable product and you don't get traction, then of course we have an issue to go any further. So it's kind of a meet the milestone or meet the wall mindset. Okay, so equity aversion, investability, presentational failing, and the great programs like from Lab to Market and others are assisting you with this respect. But as a venture capital investor, we invest into your company. You don't need to pay our investment back, but we want to have a share of your company. So that's this equity aversion part. And if you want to have a loan, then the bank financing is the right thing. But we take the risk and want to have a piece of the cake. And then, of course, understanding what investors require and then being able to present it in a way that you get over the noise. So 3 most important things that we look into the case are this market potential, so-called total addressable market. So is it big enough? So 20% of all our points that when we evaluate the case is based on this market potential. Well, the as big amount of points is based on the founder team. So if the market potential is big enough, so then do we have a team that can execute it? And oftentimes, of course, the team develops during the journey, but there needs to be the founder team, and we need to believe in that. And of course, your product, its business model and differentiation. So those are the 3 most important things. And then naturally the current situation, that if your IPRs are not vested with the company, we have an issue. Or if you have a balance sheet problem, meaning that we put in 500,000 and immediately 400,000 of that is used to pay back old loans. So then we have a problem. But these are the factors that we look into the case, and we have a system of analyzing them. And then the most important things are these that are highlighted in orange here. So you have a great case. It's a big enough. You know what are the crucial points and what do you want to present. So that you won't kill your audience with PowerPoint, so please don't do this. So I know that the great innovation that you have made, and it's super complex, but anyway, you should be able to present it in an understandable way, as said in the very beginning, so that hopefully even your child or grandmother can understand it. But we tend to think that we are not the most stupid persons on earth, but for sure we cannot know all the nitty-gritty details of your great science and innovation. So please do spend some time and quite a bit of time to crystallize your story. So good visual slides are absolutely much better than writing the story on your PowerPoint presentation or whatnot. As you can see, so also very same thing is here told in a good visual way, and then just written out. Well, then when you go and pitch and talk to investors, this applies if you are applying for Business Finland research to business financing or whatnot. Same. We are investing a lot of into research to business based cases. So if you know this financing model, but it's very same thing. Business Finland in that stage, it invests into you and your idea and innovation. So you need to really stand for it and be proud of it. And then always you should do quite a bit of practicing when pitching your case and visualizing it and so forth. But well, this being the very basic things. Well, then about the slides. So as said, the visual slides make the pitch stronger, and not too much text. That's really important to include. And then this McKinsey rule is good, that your header should include the most important point of the slide. And then the last slide is usually very valuable, because that remains on the wall when you go to Q&A. So instead of saying thank you, so you should really state the most important point of your pitch. Well, about VC, then it's good to understand that now that you can pitch your case greatly. So this is really kind of a home run based business. So we should find per portfolio. Now we have built 3 portfolios and are about to start to build the 4th one. But per portfolio you should have one so-called home run case, because then you can really make a business out of this venture capital investment. And these are the general statistics of this business. So 1 out of 10 really creates the returns, and the size of the opportunity really much matters. And then don't want to sound harsh, but this is the reality. Like we look into about 1,000 cases of business plans annually as our team, and we invest into 8 to 10 deals per year. And then of course out of these 1,000 cases, we usually take 200 to 300 into more detailed analysis, of which we meet about 60 to 70 teams annually, and then we make offers 15 to 20, and about 10 of those ends up into an investment. But this is the funnel, how it works. And pitching, it's not about just showing off. It's really condensing your business case and opportunity into 5 to 6 slides, and then finding the interest of the investor. And as investors, we have our own focuses. So different investors prefer games, different investors prefers engines and such kind of a solutions. So you should really do your homework, so you can start immediately increasing your odds of getting the investment. And usually in the early stage, pre-seed, seed, and even A round, the kind of brokers, so the companies helping you to raise funds, they are not seen as an advantage. They are more seen as a disadvantage. So usually the investor starts to think that is there some reason why this founder team is not capable of reaching me? And as I am investing in the founder team, why I'm not talking with them, but I'm talking with their service provider. But then about fundraising process. And we like to know you and then talk with you early on. So from your idea phase till you have set up the company, and of course we can invest into companies. So you need to have that, but it's not that we hear your pitch and we say no. It's usually that we hear your pitch in the early phases and we say that, okay, maybe this kind of approach could be interesting to an investor or that kind of, and then it's this kind of a process ongoing. And if I remember right, we were lucky to have maybe 2 years of discussion with KNL before we invested. And then, of course, it wasn't obvious that we were enabled to invest into KNL because KNL had many opportunities. So then we were happy to be able to invest into that case. But once you go through these hurdles, this creating prototype business model and then so forth, or first ideas of that, so then the investment process it's pretty straightforward with these term sheets, due diligence, and so forth. So on. But contact your potential investors early on, and your potential investors are the early stage investors. So it's not point to contact some B round investor when you're creating your idea, because usually they are focusing in the bit later stage companies. Well, the valuation is oftentimes interesting, and those of you who have been able or forced to read economics and business and similar, so you know this the real valuation method. So unfortunately, when you are investing into emerging technology, you don't have a pleasure to use discounted cash flow methods or something, because there is no balance sheet, there is no cash flow, there is nothing yet, and still we need to find value for your company. So we start putting the companies into this kind of framework and thinking that, okay, if the real value in the company is in the people within the company, but they don't yet have any product or anything, so it's kind of a service company, and then the exit would be kind of a talent hire, and these can be good exits, like late 90s, early 2000, big international companies acquired Finnish engineering companies in order to have access to Nokia ecosystem and have a wireless communication know-how within their team. So but then these are not usually, or these are not the cases for venture capitalists. Oftentimes, when we have a visibility to the case, they have identified the need on the market and developed some kind of a product for it. And then if it goes further, the already generates revenue and so on. And all of us venture capitalists wants to find these cases on red. So cases that provide a kind of a strategic threat for big companies. So replacing the need of Facebook or something like that. And all of us wants to find these, and it takes a time to develop your company into stage that you are really this kind of a strategic threat causer, or causing this strategic threat. And then of course at the exit point you might be here on the red, and most likely on the investment point you are here on the product gap mode, which affects the valuation that one can pay. But then your company, even when it's kind of here in valley of death, so burning more money than earning money, so then the company can gain a significant strategic value, and then so-called early exits are made that time. So company may not have any revenue or very little of revenue, and still it can be valued highly if it's really gaining this strategic value momentum. Well, this is just quickly our approach. Apologies for the busy slide. But usually we invest into a bit more than 1% of the opportunities that we have at hand. And then we make our entries in the different seed stages. And our work starts focusing on, well, first validating the if there is a technology risk, we need to get rid of that. And then we need to validate the product market fit, i.e. there's a real need on the market for your case. And then as we go further, we need to concentrate more on business, and we increase the money and time that we use on the case. And usually we get a very good co-investors, hopefully early on and latest in the A round stage. And we Finns, we don't celebrate too much, so it's always good to celebrate your all achievements, but this is really a long-term game. So it's good to achieve a startup summit, but the growth stage is what really matters, and then that's where we try to get in. But that's about my presentation. So any questions or comments now?
Yeah, we'll take those in the Q&A. But thank you very much for the presentation. Thank you. They asked a bit about how the equity offer and when they should contact you. I will answer those questions quickly. The equity stuff is kind of a difficult one. We'll take it in the Q&A. But otherwise than that, when should you contact Ville? Today in the network session. You should do that. Please talk with him then. We'll go to these questions a bit later again. We'll keep them there. Okay, thank you again, Ville, for your time, and you have great things to say, and I'd love to talk more with you in the Q&A section. Thank you, Ville.
Great, thanks.
Okay, now we will bring on Toni, and he has to be made a host because he is not. So let's see. There's so many people here. Oh, holy crap. Tony's like a ghost. He did it like I just tried to find you. Awesome. All right, Toni, welcome on stage. You're quite a cool guy. You have plenty of interaction with investors, and we're really excited to hear your story and what I'm a researcher. I've done a master's thesis. That's how much of a researcher I am. But us, all the researchers listening and potential business people, please share your story. Stage is yours.
Okay, thank you very much. It's great honor to be here. So I think I only had like 10 minutes in the agenda, so I don't bore you with the slides or spending time with my background. So I will just kind of jump straight to the point. So first, before we go more into details, I just want to point out a disclaimer here. So basically, if you like easy life or working is not kind of the highest priority, or you get stressed easy, then I think it would just make sense to be honest and say that you should go on and work for kind of keep working for some company, because being entrepreneur is most of the time is actually quite shitty thing, and kind of when you start things, it's easy to fall into the trap thinking that the things will get easier when I raise seed funding, and things will get easier when I raise Series A. The things will be easier when we generate more revenue. But I can assure that it only gets more complicated. So eventually you will get to the point where all the fun stuff is done by someone else in the organization, and basically. I'm now mainly talking from a CEO's perspective, but all the crap and all the difficult things are left for you. So this was just a disclaimer, so that I know that there's been a lot of hype around being an entrepreneur and finding companies and so on, but it is a shitty work to be honest. So just don't fool yourself. A brief overview of the investment history, what we have done in KNL Networks. So we founded the company as a spin-off from University of Oulu, Center for Wireless Communication unit, back in 2011. And on the very beginning, we engaged with very kind of a tech-driven business angel, who helped us quite much in the beginning, and also the role of that business angel was quite remarkable in that sense that it basically created credibility and granted our technology for the future venture capital-led funding rounds. Then I think it was 2014 when we raised our seed round, and back in that time, our seed round of 2 million euros, it was considered quite large seed round in Nordics. Now the round sizes they've been growing, and I guess the 2 million as a seed round is for a tech company is becoming more like an ordinary thing. On that round, it was led by Inventure from Helsinki, and it was co-invested by Butterfly Ventures and the business angel who joined already earlier. And like Ville said, I think we spent kind of from the first meeting with Butterfly Ventures to the investment, it was like 2 years. So for us, it took quite long. That was mainly because we were not sure if we want to engage with the venture capital type of investors, and also I think that as a company and as a founders, we were not ready for venture capital investment before that. Then with the seed round, we operated roughly 2 years or so, and 2016 we raised our Series A. That was at that time, I guess, one of the biggest A rounds in Nordics. It was 10 million euros round, led by Creandum from Sweden, and co-invested by a couple of new business angels, and then the previous investors joined the round. And then it was 2019, at the end of 2018, early 2019, when we made the decision together with owners that actually the best way forward for KNL and our shareholders would be not to raise a Series B, Series CD, because we are mainly working with the heavy industrial B2B and governmental B2G segments. So even if we would raise some ridiculous funding rounds, that wouldn't solve the credibility issues we had with the market. So instead, we decided to go with the strategic investor path. We were open for minority investment for some strategic investor, or then the full exit. That then eventually took place at the end of last year when Telenor Maritime acquired KNL, and Telenor is among the 10 biggest telcos in the world. 166 years of a history, 10.8 billion euros annual revenue, a bit more than 20,000 people, and listed in Oslo Stock Exchange, being the third biggest company in Oslo Stock Exchange. So that's what we are part now. Basically, the funding for us, and as I've seen for the most of the small companies or startup, it's basically a river of small kind of fund flows. So in KNL, even though we raised quite remarkable amount of venture capital funding, when we exited, the venture capital funding presented like a 40% of total funding we spent over the 9 years. Around 30% was, so to speak, non-diluting funding, Business Finland, ELY, Keksintosäätiö, all that kind of sources, and then around 30% was reinvested revenues from the customers. So this is like a just like a run through of our history. But then I have a couple of points I just wrote down. I think it's good to point out. And these are pretty much reflecting my own background, coming kind of from the of the background of finding or spinning out the company from the university, and being a CEO in deep technology companies. So the first thing is to listen and be open. So this was something that was quite hard for me in the beginning to accept, that typically people are willing to help, and especially within the entrepreneur community, people who have got something, they are really willing to give that back. So I was first surprised that there is quite seasoned entrepreneurs who are really willing to help you and support you and do all kind of things for you, and actually they are not asking anything. They just do it because they think that's what you should do. So be open and listen what people has to say. But at the same time, another thing that was hard to accept was that no one understands the business better than we did, and we do, because we basically live and breathe that every day. So it's easy to think that there's some kind of a MacGyver who understands everything inside out, but like Ville mentioned, that most of people they have very limited time to kind of consider your case, and therefore, even though it's good to admit to yourself that you don't understand a thing, the others will understand even less. So so that makes you an expert. And then when dealing with different people, you get a lot of advice and all kind of comments and opinions, which is good to take in and consider. But then on the other hand, no one else carries the responsibility. So when it's time to make the decisions, if it's wrong or right, it is you who has to carry the responsibilities. So be open, listen, but at the same time be confident and be ready to carry the consequences of your decisions. The another thing from our history, I can clearly see that we were really much focused on technology in the beginning, which is of course quite natural when you are a tech-driven research kind of a background company. But actually, to be honest, people are not that much interested in technology. People are interested in business. So please focus on business and have a clear understanding of business models and how to really make money. Because at the end of the day, if you are dealing with venture capitals, that's what matters. And other thing I just want to point out, I'm just like going through a list, but that's because of time.
Last point.
Yeah, time constraints. Protect the shares, because it's quite easy to get free riders, and eventually, kind of when you move ahead on the different investment rounds, it's quite important that you have a cap table kind of aligned, because the VCs, they don't want to take over your business. It's actually the nightmare of the VC if they need to take over your business. They are not trying to fool you. Everyone understands that the founder team and the core team, they need to be incentivized. But if you have, for example, as a research-driven startup, if you have some professors or some people who really don't contribute and they are there just because the shares are basically free in the beginning, that's going to be a massive hassle in a future.
I'll take this messy cap table discussion. Maybe even James loves to talk about that. Okay, Tony, I think we have to round off there. You also got some questions. We'll take them in the Q&A. So thank you, Tony, for sharing. And I'd love to hear a little bit more about this early angel investor that you had. I want to talk with you about that later. So thank you for sharing your story. And we'll love to hear more in the Q&A. Thank you. And then we have James. He's jumping in already. Yes, and Tony just clicked that cam button. There we go. All right, James, welcome to the stage.
Yeah, thank you very much. Let me see that. So thank you for having me today. And also want to thank the two speakers that just went in front of me. I think they've covered many of the aspects extremely well. But allow me to first just provide a brief introduction to Tera Ventures. Tera Ventures is a seed stage international VC company based in Tallinn, Estonia. We also have a physical presence in Finland and also the United States. We have about 75 million euros of assets under management over 2 funds. And we're currently investing out of our second fund in our home market in Estonia, but also the rest of the Baltics, Scandinavia, and as well as Poland and the Czech Republic. Most of our companies have gone on to fundraise and raise over 200 million from top international investors. There's just a few names in the box in the bottom left quadrant below to give you an indication in terms of the type of tier 1 VCs that our portfolio companies tend to attract after they go from seed stage and into an A round properly. We've also had a number of successful exits to conglomerates in Japan, as well as many Fortune 500 US listed companies in the States. So our hunting ground is principally depicted here in this slide. We have a very fertile and very active home market. Estonia is very, very hot right now, but we also see many similarities, particularly in Finland and also in Sweden and also a little bit further south. So this whole region we view as a pretty significant powerhouse. You have a very well-educated workforce, very high tech, cutting edge in many categories and fields. And it's a really good place to incubate and to basically get proof points in a market and to be able to quickly pivot because the cost structure is low, the markets are small, and as you start seeing the indications of product market fits, it then has kind of an arbitrage effect in terms of your ability to scale up very quickly on the back of that and expand into more significant markets. Our focus is one of a generalist, but basically it's probably easier to say what we don't invest in. Very similar to the comments earlier from Ville, we don't invest in gaming. We don't invest in clones or copycats. We don't invest in cryptocurrency. The themes that we have liked for over 10 years now have been machine learning and AI. We are looking for born global startups and founders that have the ability to compete on a world stage. The business model is really not that important to us. It can be B2B, B2B2C, B2C, SaaS, doesn't really matter. What we're looking for is something that is truly 10x, 100x, 1000x in terms of improvement and disruption, in terms of impact in the market. So there were some really great points that were made earlier, but I just wanted to underscore and stress a couple of aspects from different perspectives. One from our perspective, and then the next slide, I'd like to talk about some of the things that you need to understand about VCs and how we're thinking. The thing that's most important to us, paramount in fact, is team. It has to be a really strong, born global, very good founder fit. If there's not track record, there has to be at least deep understanding of the domain, and there has to be a very clear understanding of a thesis or problem or pain point that you're trying to address. It's okay if it's not completely figured out, but at least there has to be a solid thesis. Of course, there can be pivots along the way, but what we're looking for is the critical thinking behind it. That's absolutely important for us. We're also looking for an exponential impact. Minimum 10x return is basically what we're looking for in most cases. And it has to be either in a large market or a large market that's emerging on the horizon that's going to be enabled by technology emerging onto the scene. We will typically make the first investment. We often lead, and we can come in as early as a very well-researched thesis coming out of a lab, or demonstration, basically a minimum viable product and or product market fits with low MRR. So our ticket sizes range anywhere from sub 200,000 to all the way up to 1.5 million. So we covered pretty much the whole gamut of pre-seed, seed, and for this part of the world, in early Series A. Everything that we look at has to have a digital DNA component in it with respect to the solution. We're also happy to accept some hardware risk if necessary to propagate that. But at the end of the day, it has to be a strong digital play, or we typically will not go in for the deal. The other thing that's important is that the technology and or the approach to getting the technology to market must be unique, and it has to be defensible in some way, form, or shape, whether that's through intellectual property, business model, basically know-how, but you have to be able to, once you scale the business, demonstrate basically the ability to protect not only your turf, but also to do it in such a way that you can continue to produce good unit economics vis-a-vis your competition. I think an important message for founders to understand about VCs, and I've been on both sides of the equation. Before I became a VC about 5 years ago, I was running VC-backed companies that were basically supported by some of the top VCs, both in North America and the US. And I can't stress enough the importance of understanding who your customer is, not only in terms of the customer that you're trying to address with your solution, but also your stakeholder and your investor. It's important to understand, how their mind works, what their motivation is, and how their business operates to make sure you have good alignment. First of all, VCs are extremely busy. We have a very limited time frame as well, typically, in our investment horizon. It's not open-ended. Most funds are close-ended, which means there's about a 10-year fund life with possibly 1 or 2 year extensions. Typically, if you know you're going to have a long journey coming out of a lab, and it could be 5, 7, 10 years, you're going to be looking for VC firms that are in their investment period, the first 5 years of their fund life. Otherwise, it's going to be a misalignment with respect to your stage and also the fund stage of development. It sounds, pretty straightforward, but you'd be surprised how many times that checkbox is missed in terms of looking at potential funds to speak with by the founders. The other thing, and this is to come back to the point that Ville had made earlier in terms of, what is it you're trying to accomplish with your business and what type of capital do you actually need? The founders must understand that, we VCs, we're selling rocket fuel for rapid growth. So, it's really important to understand that we're offering that. We're offering our network to support that, and also our know-how, which is the value beyond the money that we provide as a total solution in order for you to achieve this. If you have a great business, and there's not throwing any shade at all on someone who's got a great small business or a nice lifestyle business that can get banks, can get bank financing or can raise money from angels that like the potential return and profits that could come off of that. But that's not VC. VCs are looking for tremendous growth. We're looking mostly at the top line in unit economics. Every company that Tera Ventures has sold has had a negative EBITDA. So just to give you some perspective in terms of what we're looking at in terms of growth and models and economics as we go into a VC model. The mutual alignment regarding growth plans and aspirations obviously then becomes an imperative. If it looks like you're a good fit for VC, I would also encourage you to talk to founders in the various VCs portfolio to understand their own experiences about that VC. And as said earlier, be honest with yourself. Is the company ready for VC at its present stage? Is it appropriate for VC funding at any stage? I think that's also important. Having said that, it's not too early. Even if you're in the laboratory and you're working on something that's really cool, that's not ready to spin out, it's important to, if you have the potential to be a VC play, it's important to reach out and basically establish that relationship early. We have several conversations ongoing like that right now. We have talked to some startuppers for, in some cases, not months, years before they're ready to step out and take a ticket from us. So, we're not transactional in our relationship with you. It's a highly iterative process. We spend a lot of time to get to know you. We spar with you even before we make an investment. We may skip an early stage investment and wait for an additional proof point and come in later. So it's a long-term, basically, relationship and a very highly iterative process if you're in our sites and we find the opportunity compelling as it begins to develop over time. Another point that I'd just like to reiterate that was mentioned earlier is make sure you're prepared. Make sure your communication is extremely clear. It's okay if it changes over time, but don't come in, not checking the box or having fuzzy messages. Every investment that we make must have a potential to return the fund. It won't get past our investment committee if you can't pass that gauntlet. And the crispness and the clearness on communication is important because very similar to Ville's team, we scrutinize all aspects of the deal, for these potentials, and we see over 1,500 decks per year. And we drill down in a similar fashion, but we only invest in about 5 to 7 cases per year. So it's very important to make sure that if you're going to get to that level of our pipeline, that you're hitting on basically all these aspects, and you're very crisp and clear because you're competing against everybody else that's going through our funnel. The last slide I wanted to show with you is just some examples. These are 2 investments we made recently out of our second fund, and it just gives you an understanding of the types of problems that these companies are solving. In many cases, they're opening up completely new genres and solving big problems that have been there, but basically have not been addressed, or in some cases are opening up whole new capabilities, like in the case of Snackable regarding search on the spoken word. So they're basically cataloging and categorizing the ability to grab data that's on the internet through search and basically index it and produce it. And they're also doing it for a number of publishers as well, so that they can have control over that and have the ability to monetize it. And you can see the name of some of the notable investors that were attracted only during the seed stage round. So it's not just us. And again, we very rarely ever make an investment by ourselves. We're typically syndicating most deals and looking for people who have complementary backgrounds and skill set, because as a generalist, we're typically not the smartest guys in the room, so we do look for domain experts in many cases to invest alongside us. Another example is Brainbase. Brainbase is two Estonian founders and one American founder, and they saw a huge problem with respect to something that might be otherwise considered mundane, and that's basically managing the portfolio of intellectual property for large corporates. And what they discovered is, many of these corporates were using several quite crappy tools or spreadsheets and very dislocated. And what they did is they came up with a brilliant CRM, and then beyond that, a marketplace offering. And then now building in basically an AI component to help them reach a larger market at a much lower cost, making it easier for everybody in the ecosystem and basically grabbing the entire space. And you can see the most recent investment that was led by Bessemer at the bottom. So let me stop there, because I noticed that we're coming to the top of the hour, and I want to be respectful of the agenda, and I'll hand it back over.
All right, James. Thank you very much for that. You've been better to keep in the time than I've been, so thank you very much for that. I want to get into the questions, and because I actually could start with, we have the Q&A and stuff, like the Q&A questions, and I have plenty of questions here I'd love to ask you. So if I can bring you all on the stage, you can just click the stage button again, the cam on button for all you speakers. Just click that button and you'll be able to go into the stage. Yes, there we go. James is in the house, and let's see if we can get the other ones. But while we're waiting for them to click that button for Ville and Tony might need help to get on the stage, by the way, Juho. He's not as a speaker. But let me ask to get a question first that will come from the Q&A, and let's keep this one a little bit short. They ask how much to offer in equity. And I will state this. I say it's 15 to 20% no matter what. And correct me if I'm wrong. Ville, you can start.
Yeah, okay. So, we deploy this milestone-based investments. I know that there are players who say that that's not the right thing to do, but my answer is that I have lost my crystal ball. So I have to keep on betting those cases that go further fastest. So we don't need to get 15% with our first tranche, but that's basically where we are aiming with the cases that develop fastest and gets most of our money.
All right, thank you, Ville. So you say you say he didn't talk about how many millions and stuff. It's like around 15% is what they're looking for usually. Okay, how about you, James? What's your answer on that? You're muted again. Sorry, we can't hear you. See, yes, there we go.
As said, we're between a range of 200,000 and 1.5 million, and whether we're coming in early or late on that spectrum, we typically target between 15% on the way in, and we hope, and we usually keep 2x in reserve for follow-ons. And by the time we let go of the company, we target to still have about a 10% stake in the business. So we try to be very founder-friendly with respect to the terms. So sometimes we'll come in at 10%, but that's probably at the upper end of our strata if we're coming in with a larger ticket.
There we go. Thank you, James, for that. And so what you can hear here is that they are, we'll have to look at the valuation, what your company worth and stuff, but they will more or less always end up in a situation where they are owning somewhere around 15. That's what they're going for. And Tony, I don't know, how much did you have to give in your first two rounds, the angel and the second one? How much did you give?
Well, I can't remember
long ago
anymore, but it's
the angel had 1% in the end.
Yeah, it's something in that ballpark, and kind of when talking from a founder perspective, I think it's good to like Ville and James said that actually kind of the figures doesn't make sense. There's a certain percentage that the investor is looking to have in order to have kind of a big enough impact, but they don't go kind of a high enough or higher than what is required, because then the founders and the core team is not incentivized anymore, and the cap table is then kind of if after 2 funding rounds the founding team has 10% of the ownership, then there's not going to be a 3rd round anymore.
Yeah, and I can mention for those of you who asked this question, you can look at YouTube and ask the same question, but look for the European version. The thing is, all areas are different, but look for Europe because we have our own way of doing this. Okay, I'll consider that answered, even though you might not be happy, but we'll move on. So here are the guys working with the research to business funding. Actually, I'm doing that as well, so that's kind of a good question. So when it's in what stage should they contact you? Because let me set the stage. So in my case, which is similar to the one that's searching here, we'll hopefully get funding starting in June, and we have 1 whole year of development where we can spend money on all kinds of interesting things. And by the end of that year, or maybe in most cases 1.5 year, we should be investable. That's the gist of the general thing. So that's quite a long time. So what would be the process? I would ask you like this: what would be a preferred relationship I should have with you guys? Let's start with James this time. What would be a preferred relationship to build a potential investment for us?
So how we do that, and particularly in Estonia, we have a playbook where our partners are pretty involved in these accelerator programs and competitions, particularly with startuppers coming out of university and lab. And usually they can win a grant anywhere between 40 to 60,000, and then beyond that, they're looking for angel investments and potentially some additional larger soft funding. They're already on our radar. If we like the case, we may come in, as they get done with that first grant, or actually put a term sheet on the table as they're exhausting it. So it's really not too early. We're very active, already at the kind of the ideation phase, as mentioned previously.
All right, thank you, James, for that. How about you, Ville? What is a good way to have a relationship with you guys from a startup perspective?
Yeah, of course. Now during the COVID times, it's a new world, but the best way is to get to know us, and because we would like to get to know you, and then to meet us in different accelerator or some other meetups, and then talk to us and participate in those competitions, and then you get above the noise. And as Toni said, we were lucky to talk with them 2+ years before the investments, and oftentimes we have that, and then sometimes we find a case and close the round in 2 months, and then that's probably the best we can do. So really early on idea phase, it's not too early, but then our contribution is probably just giving a directions.
How about if I meet you like here, as I said, they should talk with you in this opportunity that they get. But let's say either I did that or not. But how about that I would send some like kind of update, like a monthly, like this is what I'm working on, this is how my growth is looking like. Is that something you guys would like to read? So I'm thinking about the continuous contacts. What are you looking at? Yeah, maybe James, you can answer that first.
Yeah, I mean, we encourage that all the time. I mean, I think we often, when we get into the tiny part of the funnel, we're oftentimes saying not yet more than no, particular cases that we like. So we want to continue to get updates all the time, because we're looking for that evolution and certain proof point in that particular case before we could decide to lean in. So every time there's something substantive or material that's going on, we ask them to keep us informed, particularly during these COVID times. It's hard to get together and at various events, so we encourage them to send over updates to us as they continue to progress.
All right, thank you. I'll move on for that question. So thank you, James and Ville, for that answer. Now we're going to go to you, Toni. So they have a question here. You said it took you 2 years to be ready for VC funding. So you actually I want to ask you about this. It's actually related. You got an angel in very early, you said. Could you tell me a little bit about that, and then go to the venture part of the story?
On the very early stage already, there was one angel investor who actually helped us.
But
a
like,
lot
but
with
why? Many people I meet, researchers be like, no, don't touch my company. I'm researching, you know.
Yeah, well, I think that doesn't make any sense.
Did he just reach out? How did you think consciously? I want to have a business angel partner.
No, I happened to just by coincidence know him personally, and then kind of we started talking about things, and he got involved and excited about the idea. Kind of in our interaction, the idea was not to get him to invest in us, but maybe to help us more with the idea and all that part. And like I stated before, that it is actually surprising how willingness the entrepreneurs are to help each other.
Yeah.
So that is something not to underestimate.
Do you think you would have succeeded in the way that you did if you wouldn't have had that type of support early on?
Probably not, because what we were building, it was quite kind of substantial in a way that we built the whole communication system from the scratch, and kind of that's quite a big thing. Kind of of course, we look at it from a technical perspective, and we completely underestimated the importance of the business and required resourcing and all that.
I can tell you a little bit of story that might be related. I did an accelerate. I run accelerators usually every year, and my first one I ran, we had a really technical, really cool guy, and he was running the whole startup through the accelerator. In the end of the accelerator, he was a technical guy, like a coder genius. And after the accelerator was over, we asked what was the most important thing that you learned, and he said, I learned that there's actual value in having someone with a business perspective. And I was kind of shocked, because I thought that I'm a business guy. I'm super important, but I think but the thing is, I can't sell a thing that doesn't exist. So we need each other. So get somebody. Now, you had an angel investor that might be the right choice, but getting somebody with business experience involved is really important. And somewhere that I think it was James who said, take references. There are all these free riders running along. I was Tony who talked about, somebody of you talked about free riders as well. People will come along and say, hey, you got a business. Oh, let me help you out. I got so much experience, and they'll just, help you out. And I would say in 50% of cases, that's a complete idiot. And if they get your shares, it's like you can't get rid of them. Like depend a bit on your contract, but you can't, it's like, you give them a part of your life, and then they're stuck with that because of the ownership rules of Finland. That's just giving you somebody money. Here's 100 euros. And they know I want it back. It's like, no, he gave it to me. It's mine now. You can't just take it. That's theft. So, so take the references. Okay, that's a kind of a story about it. But then you said it took you 2 years. Can you elaborate a little bit on that? Why did you need 2 years to actually get to a VC stage?
We were quite suspicious, so we thought that these VCs, they will just come and they will try to take over.
James and Ville, they're like, oh, gotta watch out.
Yeah, they were.
As you can see, but then it took us like 2 years to learn that the VCs, they are decent people. So it is people's business. So and I think it works both ways, and therefore there needs to be a certain chemistry and a trust. And respect, and again, it works both ways. So when you're making the deal, you're of course the other sides of the table, but then when you have signed, you're actually on the same boat, going to the same direction. And this is something that I have spoken a lot with entrepreneurs and new founders, and tried to help them a bit along the way. And this is something that basically everyone are afraid of. That the VCs will come and they will take over the company, and that's actually the nightmare of the VC.
Yeah.
And also, if you think that once you have the deal done, then the incentives are fully aligned. Everyone are just looking to increase the value of the shares in business.
All right. Thank you, Tony, for that. Let's see here. I will ask actually, they have discussed what post-closing actions, including a fundraising process. I think that's too technical. You have to ask that or check somewhere else. Here we have a question. Do you need to have revenue before we approach you, and how much should it be? So I'll say to answer the question, they can approach you right now, correct? Because they have a cool idea. Yeah, they can talk with you. Yeah, good, right? So you got that answer. Just approach them. But in a case where you would where you are likely to put money in, there is some turnover. Am I correct?
Not always.
Not always. Okay.
No,
Can you
no,
give me?
no.
Okay, so it depends on what type of tech you have, and that's why you should approach them now. You who wrote this, Alexandra, approach them so they can tell you if we want to. First of all, you can see if you're a match from what they want, like what the type, like say these guys don't invest in gaming and other things, but you mostly of you are scientists, so I don't think that's an issue. But you can just check that are we a match and say yes. Then James and Ville will tell you if we want to. From like this early stage, it sounds like hypothetically yes, very hypothetically, and this is what I need to see for me to be interested. And that's what you should ask them. You can ask them like straight up, like, this is what I have, and what do you need to see? And if you deliver that, you see James is not in here, he'll be very happy. Right?
Yeah, we'll tell you. I mean, once we understand the case and we see where you are in the development and the evolution and what it's going to take to get to some type of demonstrable product. We also have various tools in our toolkit that we can help with. We do have relationships with writers who can help write grants. We can also suggest different accelerators. We can introduce you to people who are micro VCs and go early. Even if we're not quite ready, we can extend that network so that we can develop you so that when we are ready for that particular case, we can. But having said that, one of our most successful companies in our first fund came to us with a slide deck and a very well-researched thesis, and we were their first ticket, and that was before they had product. And now they're one of the most preeminent fintechs in Europe.
Right. Thank you. Thank you, James. Can I ask you a little bit more specific question around this? Can you give us like a little story about a company where you've had this interaction a little bit going to and from, preferably a case where they ended up having turnover before you invested? Do you have any of those cases? You can kind of give an example of the timeline, the bouncing that goes on, and when it actually lands into an investment.
Yeah, I can imagine few, and then it's not really a company to whom we said no. It's like usually we frame it that we would like to see a bit more of this and a bit more of that, and would you be able to test that or test this? And there is actually quite many of those where we are having this kind of a discussion for a few months or even years, and we had this kind of a discussion with KNL, and it was definitely not us saying that we don't want to invest into you, because you can be sure that we wanted to invest it before we had the funds from which to invest. But still, it's not that point. It's just that a little bit that direction and then so forth. So I hope that it's that kind of a collaborative discussion more than. At least I personally think that my business, I'm a service provider. My task is to serve the companies. If there are not great entrepreneurs, I'm out of job. So my thing is to help to serve you to go, and I'm deadly serious. That's my mindset. So when I can help Toni or others, that's really the way to think. And that's the last thing that I want to be considered as an arrogant venture capitalist who sits in its throne and says yes and no, and then still I have lost my crystal ball. So I need to work with you entrepreneurs to do it. So long answer to your short question, and I'm not even sure did I answer your question.
No, but it was okay. Yeah, James, if you want to add on that.
Just about that too. I mean, as Ville's company, and sometimes Tera, when we're waiting, the startups will go out to angel investors to take some money, and that's okay. We appreciate that can happen. Also very happy to have a discussion and coach them about those rounds as well, so that we don't have to come in later and fix the cap table because it was broken because the angels basically were too greedy.
Yeah, and angels are kind of angels are like, if you compare to a VC, VCs are like the if you do sports, they're like the pro levels, so the guys getting paid to play, and angels are amateurs that might be good, but I'm going to offend somebody, I know, but it's more like they're the amateur players because they use their own money. They have made the money somewhere, but they might they might invest in like 3 startups a year, or 1 startup a year, or 1 startup 1 year, and no the second. Like it's such a vast grasp. Well, but let's talk about the crappy cap table. Yeah, yes, it's sorry. James.
But I mean, we don't see angels because I think Feebound produces a lot of really good angels. I'm actually an angel investor.
Oh, sorry, I thought I was going to offend somebody.
But you know, but I think in Finland and in Estonia, I think where we see irregularities in cap tables is perhaps when an early investor like a corporate might come in and grab too much as a strategic investor.
Yeah.
We don't usually see term sheets that are too mucked up in this part of the world. Perhaps when we go down into Central Europe, we come across some interesting things still today, but even that has been getting better over time.
Could you give an example of this corporate? Because this can happen to us in the science field, that we get some type of really cool partner that will come and eat too much. Can you give an example? If you have a concrete example of that, I'd love to hear it. Maybe James and yeah.
So, well, I mean, as it pertains to corporates, I mean, one of the issues is if they come in already and they grab too big of a tranche.
Well, how big is too big?
I mean, if they're coming in, they're asking for 35, 40% of the company, and then you have to come in now and do a proper seed round. We have to have a hard talk before we could ever come in, or they'll be talking to the back of our head pretty fast, right? Yeah. With respect to pulling something out of an institution or actually investing in a spin out coming out of a corporate lab or something like that, there always has to be a very hard discussion as well about what the terms are. With respect to that, we typically like to see corporates or institutions being placed in terms of obligations for the fair market value of the IP on the balance sheet more than the cap table to the extent possible, so that again, you're not sitting in a situation where you have a corporation and or a research institute combined with venture capital and VC taking over a majority of the company while the company is still very much in a nascent stage.
How about you, Ville? Do you have an example of this when the cap table's gone wrong?
Yeah, so we have decided maybe 5 to 10 times not to invest in the case because the cap table was skewed and we couldn't get it fixed. And then the kind of definition of free rider is that your ownership exceeds your contribution, and then of course that's a difficult question. What does it mean? But my rule of thumb is that in the very beginning, when the university or research institution has transferred the IPs and IPRs and maybe reserved some grants and the shares, and then there might be the first business angel and something like that. The founder team still should own approximately 90%. And then when you get the seed investors in, before and after the A round still, the founder should own 50% plus something. But this is... And then as you go further, if you really hit the big B round, then the founders can go below 50% because then the cake is big enough and all of us incentivized. But it really kind of builds like this. And the few examples are that the old examples, and this doesn't happen anymore, but there were this kind of a service provider who said that, okay, I will file your company into Finnish trade register and I will only take 10%.
But I think they mess up the whole, then you can't go anywhere because that guy's like messing it all up.
Yeah.
So you should.
And that happened, but luckily we have Feebounds and others who are teaching these best practices, and so that's not happening so much anymore.
I will get to Tony in a sec, but just I'm somewhat experienced in this. I've run a couple of businesses and I've done this. I have had one of those cap tables that you're talking about, like a really bad one, and that messed it up many things. And I would just say that before you guys get incorporated, like even before you really get the company started, talk with a business coach of some sort. Usually accelerators like in Tampere or Turku, Helsinki, we have a lot of these. Just talk, or one of these investor guys, because if you set it up wrong, it's never going to go anywhere. It's such a bad thing. But okay, Tony, go for it. What's your take on this?
Yeah, maybe just to add on, I think messing up cap table is one thing, but then especially when we're talking about research-driven startups, there might be some kind of a crazy royalty agreements that universities, for example, after. and I would consider those like an absolute no-go. And just to give you an idea, that was, for example, in our M&A process when we sold the company, that was probably the part that we spent most time on a due diligence phase to make sure that there's absolutely no that kind of a royalty or IP commitments. And again, those are easy to give when basically things don't have value. So you think that instead of paying 5,000 euros, I will just give a 5% of a royalty, and then you basically ruin the whole
I was
case.
thinking of doing that, so I'm happy that you said that, because I was like, how if I get 1% royalty, I think that's a nice deal, but apparently that's horrible.
Yeah, you can keep it, but then you need to have like a backstop in 3 years and make sure that you don't generate any revenue.
Exactly. There we go.
And there's kind of a European average, like if the IPs and IPRs are transferred by these institutions like VTTs or universities. So European average is usually 3 to 6% equity if you end up agreeing about equity. And then we have these few extremes that, for example, there's one Finnish university that requires to have 30% of equity, and we are not the only VC saying for them, university people, that you are killing this case before it starts running. So but then there's a royalty agreement, so it's a risky business. Universities are not allowed to think that if we give our IPs and IPRs to the company, and if it fails, we need to be able to pull it back. I've been just saying to them that, okay, I put in 500,000. Do I get it back if it fails?
No.
Because we share the downside and the upside if there's this equity stake, and then we kind of prefer that if the other alternative is this kind of a royalty-based solution. We'd rather have a university to own this 3-4% in the beginning and starts diluting with rest of us.
Yeah.
So.
Well, I think that's thank you for that. That's for all the institutional people here to listen. That's good. Can I ask another question? I think this might be the last question. Oh, you know what? I'll skip that question. Do you have something that you think I should have asked, or something that you guys would like to ask each other that you think we didn't cover? Yeah, Toni.
Yeah, actually, one thing when there was a question about kind of how to contact the investors and so on. So maybe James and Ville, if you can share your views that in how many kind of a cold call investments you have made to the team that basically just reach you out, or what is kind of the ratio between someone introducing them, or kind of a building that relationship in some way? What is your take on that?
I'm happy to go. I mean, we receive a lot of inbounds all the time, and typically we have a process that brings everything in, and we basically filter it. And we have an analyst who's usually the first port of call in terms of when that comes in. He will then basically review it against kind of what our investment requirements are. If it's something that is important and prioritizes and escalates, it'll go into our weekly meeting, and then usually a GP, partner will get identified to be a sponsor for the case, and then open up the dialogue. If it's something that doesn't really fit well, typically the analyst will record it in our system and send out a polite reply that it's under review at the moment, and it will go into a queue, and eventually we will decide whether or not we're going to put any more attention on it if it's not a high priority target. But typically everybody will get a reply. The best way to get to us, if you think you have a case, is identify somebody who actually knows us to get a warm intro, because cold intros are usually not very effective unless you've got a really dazzling opportunity that catches our attention. If it's still very much conceptual and you want to have a proper talk, there's a lot of people who know us in the community. Find somebody that you might know to make a proper warm intro, and it will certainly get our gaze faster in terms of a priority focus.
Thank you, James. How about you, Ville? What's your comment on that?
Yeah, fully agree, especially that it's much faster process if you somebody gives us a warm intro, we spend a lot of time of digging out new cases, and we want to develop these relationships and start working on those. But like in Tony's case, so the business angel that they had, the person who we trust fully, and we have invested with him 5 times already, or something like that. It's the much faster process, and then still it can be a long process. But the ratio, I don't know, it's pretty much more than 50%. There is a longer relationship building than just a cold call.
All right, thank you. We are again running on the time here, so we're going to go to the tables very soon. I'm going to have a little intro, not an intro, but an exit. I don't know what it's called, ending things. But before that, so thank you, James. Thank you, Ville. Thank you, Tony, for coming in. So if you can, you can close off your cameras for now, and I'll just do a quick, because some of you missed the beginning, and I have some small things to share. So I'll share this thing. So let's see, I put the presenter on. So just go through again. So these were the guys. Thank you very much, Ville. Thank you, Tony. Thank you, James. Now we'll very soon get to the tables, so please make use of them. Go to their table. I've hyped it up now. You see, they all want to talk with you. It's not often that people like to talk with you that much, so you take the time. And here again, what do you need to get involved? Alto has plenty of services. All of you who are from the Alto environment, you can read on the screen. These are the services available for you. Reach out to the Innovation Services or Venture Program or Startup Center. With VTT, if you're a business person, if you have commercialization experience, get involved. Please reach out. And Lotta is here, or somebody will be here at the VTT table, so you can look at the table here as well. And yes, Fiban, guys, you might wanted to talk. Sorry about that. Did you want to say something? You got to write in the chat or something to bring you up. Because otherwise I will just move on very fast. You have 20 seconds to respond. Write in the chat or something. Otherwise I will not let you on stage. You have another. Oh, there we go. Let's see. Great discussion. Thank you so much. All right. Yeah. Thank you, Akshandra. Thank you for that. Okay, Fiban, I'll move on. You got to get back to me if you want to talk. But you're going to be big on the next event, so you'll get plenty of time to talk then. But Fiban is great. You can also pitch there. You can get to know all these angel investors. That was a question. How to get to know business angels? This is the way. How to get to me on LinkedIn? I think me, it's you just search for my name, Rasmus Basrea. I'll write it, and then you can find, just search for my name on LinkedIn. And otherwise, I think all the you can just search for the names of the hosts. You can find them on LinkedIn, and you can find the event on LinkedIn, and there you can find the names of these people. We'll all be in the tables in the end, so you can also talk with us there if you want to connect. Moving on, that was Fiban. Remember again, if you're in medtech, Health Incubator Helsinki has opportunities. Norrsken is doing impact investment, that is for climate or trash or killing the environment or social, helping social situations. So that's their area. So they give 100K for 5%. I hope the VC guys think that's a good deal. I think it's a decent deal. It's only 5% equity, so I think it's quite good. The next event is the 3rd of the 3rd. You can find it on LinkedIn as well. So please join. It's going to be investor related. And I'll start my podcast. If you have ideas what you want to hear, please let me know. And yes, now it's time to get to the tables. Thank you all. If you want to talk more with me, I'll be at the table as well. And I'll see you there.